Hey everybody, what is going on? I pray all is well. I am here on Instagram, TradingView, and YouTube, and today we are going to be talking about various risk management strategies. So I understand that a lot of you are trading with prop firms, a lot of you are even trading your own money, but you might be having like a really hard time coming up with a risk management strategy, trying to figure out what your lot size is, trying to figure out how much to risk in every single trade. And I have to be honest, like when I first started trading, I did not understand risk management at all. I did not understand lot sizes. I did not understand risk percentages. I had no idea what any of that is. And so, I work constantly on that. And I have to be honest, I think risk management is something that you're always going to be tweaking until you find what works for you. But I do want to talk about really quick what risk management is not. Risk management is not just picking a lot size out of thin air and saying, oh, here's a trade. I'm going to go ahead and use this lot size. Risk management is not knowing how to not trade and then placing a trade and then putting any position on, because even if you risk 1% per trade, but you might not know how to trade, that still doesn't mean you're doing good in the market and you're managing your trade well. You're still going to lose the 1%, no matter if you don't have a trading plan, no matter if you don't have a strategy. So it's always important to understand risk management is not just putting on the trade and then watching it. That's not what this is. Risk management is basically saying, once I am in this trade or before I am in this trade, do I understand how much size I'm trading with? Do I understand and can I comfortably risk this amount without it affecting my mental capacity? Um, and also, do I understand that if I do make this amount of money, am I going to withdraw it or am I going to keep it in my account to compound the account, to make more money, to risk a little bit more size? These all entail risk management. Okay. So, as I'm talking to you guys through this, I am on a price chart. There is a mock up of what I'm talking about. And if you're on Instagram and you're just listening to me, listen and take notes if you can. And I do keep these replays up for you guys. And if you're new to me, hi, I'm Shaquan. If you're not new to me, welcome back. I am a Forex coach. I am a Forex trader. I am a mom. I am a wife. I'm a basketball coach. Like, I am a lot of things. But one thing that I love doing and I think I'm blessed to do is just teach. And I love teaching. I love giving back. I understand what it's like to be a beginner Forex trader, and I am here to help you guys just navigate the markets. Okay. So, as I am on these three platforms, if y'all have any questions, y'all feel free to ask me a question. As I'm teaching, if I see it, I'll answer, or I'll answer it like after I'm done teaching, because I like to be very focused when I'm doing this. We're going to be on here for a few minutes. I always say like 15 to 30. It don't ever work out that way. I'm always on longer, but I never mind if I have the time. I got a little bit of time, So let's go ahead and go over this, okay? A lot of us want to know like what's the correct position size or lot size to use. I think before you ask that question or you look into that, you first need to ask yourself, if I have a trade and I see a trade and I want to enter this trade, how much of my capital, my account balance, am I going to put into this trade, right? That's the very first thing we have to think about when we think about risk. How much am I willing to lose in this position? So I have a formula. I teach everybody this formula. It's a very simple formula. It's the formula that all of these risk calculator have, right? So you got to look at your account balance. How much are you trading with? If you're trading with a prop firm, maybe you're starting off small and you find a prop firm that say, hey, you can start with $10,000 or $5,000. Maybe you're doing the medium amount and you're starting with $25,000 or $50,000. Maybe you're going big and you're starting with $100,000 or $200,000, right? So whatever amount you're trading with, write it down, put it in the Excel spreadsheet, write it in a journal. Whatever you're using, start there. Okay. The next thing you want to do is you want to ask yourself, well, out of this 100,000 within this trade, how much risk am I comfortable with putting in this? I think a lot of us are looking for people to give them numbers. Like, hey, this person trades this person says they do this person says they do that. But I want to give you permission to explore it for yourself. You might not be the person who wants to risk 1%. You might be the person who's more aggressive and you might want to risk 2% or maybe 1.5. And there's going to be someone who is going to disagree with you. Let them disagree. I think there's always going to be a disagreement with what you should do. But if you know your strategy works well, if you've been back testing it and you find that risking a little bit more than 1% does not hurt you and it does not hurt your mental capacity, I think you should go for it. I honestly do. You might not be as risk averse. You might be the person to say, you know what, 1% is that's all me. That's all me, right? And I think you should actually go for that as well. You might also be the person who says, you know what, 1% is a little bit too heavy for me. Let me go ahead and go down in my percentage. Now, understand percentage is not talking about the lot size just yet. You're not there. You're not thinking about a lot size. You're just thinking about how much you're storing into your account, right? Or into this trade so that you don't risk the full 100,000, or maybe you're trading with 1,000. You don't want to risk the full $1,000. You just want to, risk a portion, a small portion of those funds so you don't have to keep starting over. That's why we talk about risk management. How do you manage the trade so you don't have to keep starting over? That's all this is, okay? So maybe you might say, hey, I'll risk 0.5% or I'll risk 0.75%, or you might go as low as 0.25%. I honestly think when you're really starting off, you should risk as low as possible when you don't have a trading plan, because when you're trading and you're new, you're not gonna have a trading plan. You have no idea what to trade. You have no idea what strategy you're looking for. You should really start off as low as possible, right? So yeah, you might be there. You might say, you know what, because I don't know what I'm doing, I'm just going to risk 0.10% of my account and just see what I can do from there until I get comfortable with more size, right? So think about it from there. So the next thing you're going to look at is say, well, let's say you have this $100,000 account. I'm just going to go there because of the mock-up. You have this $100,000 account. You're risking 1%. Now you're seeing, okay, out of this $100,000, I could put $1,000 into this trade, right? Now, the $1,000 represents how much you can lose. That's all this is, right? But you have to be comfortable with losing $1,000 in real life. And let's put this into perspective. In real life, some of you make $1,000 in 2 or 3 days from work. Some of you make $1,000 a week. Some of you don't make $1,000 in a week. So if you're not okay with losing $1,000, that means that even if you have $100,000 or $200,000 and you're not ready to lose that, you have to decrease your risk percentage, because what's going to happen is you're mentally not prepared to risk that much. You're mentally not prepared to see that much go out of your account because it could cause a negative effect. It could cause you to lose sleep. It could literally cause you to stop your charts and now you don't have peace, right? So you have to be okay with saying, okay, I could put $1,000 into this trade. Now, what you also have to look at is, what does this mean for the profit side? What does this mean to how you're going to be making money? So if you put $1,000 into this account and you can reward yourself if you do win this trade more than 1%, what as a mock-up, right? Now, let's talk about if you're the other type of trader who says, I need to risk less. Let's say you're the person who says, I don't want to risk $1,000. I want to risk 0.5% or $500. All of this is mathematical, right? So if you're the person who says, listen, I want to risk $500 because $1,000, I just can't see that go. I do not want to see that go out of my account. Then you have to understand what this means for the profit side. The profit side is, if you make more than 1% back, you're going to make more than $500. And I'm saying this to put this back into perspective. However much you risk, you want to always make more of that back. That's why a lot of people focus more on risk to reward more than the position size of the account, because you want to go for those, rewards of two, where you can get twice as much as you make or you're risking, or three times as much as you're risking. Because in case you do go into a loss, which some of us do lose our trades, we lose trades, right? You want to make sure that the next trade, even if you lose a trade, you're still in profit or you can still be profitable. Okay. Now, let's talk about the prop firm standards really quick. So, most prop firms have this rule, they want you to make 10%, right? What does this 10% stand for? Why 10%? Because basically they're saying, can and 10% is a lot. I don't know about y'all, but 10% is actually a lot. But what they're saying is, can you reach this higher goal? Can you reach this goal to beat out the S&P? That's the stock market. Or can you reach this goal to beat out how most people would invest to make back in a year? And I understand the numbers behind it, because if you're an investor, then you understand that most investments in the stock market only get you back like 8%, right? Within a year. And most of these prop firms, especially in the beginning, especially on the forex side, wanted you to make 10% in a month. And I'm kind of glad they're doing away with the 30-day rule. I am so glad most prop firms are doing away with this 30-day rule, because 10% in 1 month is pressure. That is a lot of pressure that most of us traders cannot trade under. That's a lot, right? And so in my mind, if investors are expecting to make this back in a year, why did these prop firms want us to make it back or to make 10% in a month? You kind of set a lot of traders up for failure. So I am glad that they done away with that rule. But anyway, they want you to make 10%. Now they're saying they don't care how long you take, right? As long as you don't go inactive on your account. So now they also have this 5%, or not now, but they've always had this 5% daily drawdown rule, which means you cannot lose 5% in 1 day, meaning you need to cut yourself off if you're on a losing streak. And then they want you to not lose 10% of the entire account, meaning if you don't lose 10% of this account, and if you can keep the account above that 10% threshold, we want you to, go towards the 10% profit target. That's what we're wanting you to do. So we're going to give you wiggle room here. The 10% drawdown, max drawdown, is wiggle room that all of you need. Because if you're blowing accounts, and think about this, if you're the person who's been blowing accounts, why not give yourself cutoffs? Why not give yourself a cutoff time of the day if you've lost 2 to 3 trades? Why not give yourself a cutoff time if you just keep losing and losing and losing and losing and losing? Cut yourself off. And that's what these prop firms are telling you. That's the limits, right? So let's take the first trader that I just talked about, the person who's going to risk the 1%. You are more on the fast and aggressive approach in your prop firm account, or even if you're trading your own money. And one of the reasons being is because you need to start to think about how many trades can you lose until you reach that daily drawdown, or until you reach that max drawdown, right? So that's two of the things you're looking at. You're looking at your limits, and then you're looking at the reward until you reach your profit target. So think about this. If I'm a trader who they say, hey, I want to each trade that I'm in, I want it to be a 1-to-1, right? Or 1-to-2, or 1-to-3. Well, what does this mean for you on the flip side? What this means is that if you can't lose 5 trades in a day, you can't lose 10 trades in a row, then that means that your R multiple, or your reward, how much you make for yourself, you have to have a 10 reward profit, or you have to 10 times that 1% to make the money that they want you to make, because 10% of 100,000 is $10,000. And I want you to put that into perspective again. How life changing can $10,000 be in your life right now? How life changing can $10,000 literally change the scope of how you trade if you could make that in a month, or if you could make that in 60 days, or if you could make that in 90 days? Put that amount into perspective, okay? Think about that. All right. Now, if you are trader B, you still got to reach a 10% profit target and still adhere to the same drawdown rules. Still adhere to the same max drawdown rules. Make double, especially if you go down from 1% to 0.5, you now have to make double than the person who's going to risk 1%. So you're on a slow and steady pace. And what this means is that instead of saying you can't lose 5% in a day, you're putting yourself in a position to say, hey, if they go in at 1%, they can't lose 5 trades in a day. I can't lose 10 trades in a day. So you're giving yourself more opportunities to play, right? Or if you're the person who's risking 1% and you can't lose 10 trades in a row, trader B, who's risking 0.5% or $500 per trade, they're like, listen, I can't lose 20 trades in a row. But your reward needs to be 20 times what trader A is making, the person who's risking 1%. You're just giving yourself more opportunities to play. That can be a good thing, that can be a bad thing. Just like trader one with 1%. That can be a good thing, that can be a bad thing. Or the person who risks more than 1%, or the person who maybe risk 1.5% or 2% per trade. It could be a good thing or it could be a bad thing. You need to ask yourself, which one are you? Are you the person who doesn't mind the fast and aggressive approach, or are you the person who likes the slow and steady pace? No one can literally tell you what to do in that instance. A lot of us look at these um documentaries or podcasts of traders and their experiences, and I don't know if y'all hear the common thread. The commonality between all of these traders is that they've lost multiple accounts. I've lost multiple accounts. I've won multiple accounts. I've lost multiple past challenges, right? But that's what a lot of them experienced. It wasn't because of all bad trades. It wasn't because of all bad markets. It was two things, if y'all ever listen to them. One is the way they traded mentally. Two is risk management. Everything boils down to those two things: your mental capacity, which is your piece to trade, and then your risk management, your position sizing, right? It's all about how much you're storing into every single trade. That's what this is really about. Okay. Now, when things are going well, this looks good. Like this mock up right here, when things are going well, this looks good. You're in profit, you're not in drawdown, maybe a little bit in drawdown, but not enough to hurt. But something that we don't necessarily talk about that we should talk about more, I'm gonna give you two things. So we do talk about this, but I'm gonna give you one more thing on this, is the drawdown. A lot of traders who I talk to, teach, and even myself included, we all go through drawdown. Okay. Drawdown is not sexy. Drawdown is not cute to talk about. Drawdown is embarrassing. Um, but that doesn't mean you're always doing something wrong. And so the way you manage your trades is very important. All right. One, you don't want to let your losers run. Meaning this: if you have a stop loss, please adhere to your stop loss. Please know that that stop loss is there to work for you. Okay. That's why we put stop losses. That's why the stop losses are there. Okay. If anything, you want to have a break even rule. If anything, you want to have a point in which you say, hey, I can lock in my profits and not lose the full 1% or 0.5% or whatever the case may be, right? So here's how this can look. If your max drawdown on your trading account, your prop firm account, or your own personal rule is 10%, if you reach the 5% target on that, the mark on that, you've lost 5%. Two things need to happen. You need to be aware of what the trading problem is. Has the market changed? Have you changed? Have you missed setups that could have made you profitable? Are you not adhering to your trading plan? Have you changed your strategy? Are you not using the time frames you're supposed to be trading? Are you holding your trades past your stop loss? What has happened? What is the problem? Write it down. What are the problems? A bigger thing is, have you gotten help for your problems? Prop firms are great because they have people there who can help you. Like you, they have support. If you're with a mentor, or your coach, go to your coach and say, hey, I am having this problem. A lot of times what some traders do, they try to figure it out themselves. And when you're in the problem, you can't see. You can't. That's why we have friends, right? That's why we have spouses. That's why we have people besides us, therapists or whoever, they're looking in. We're trying to fix it. We're inside of the box. We can't see. So you have to have someone to hear you, to see you, to say, hey, have you considered this? So if you can't become aware of your own problem, go get help for your problem. Okay. And then do a psychology and emotional check. It's one of the reasons why you're in drawdown, because you're revenge trading. um have you stopped trading? Like, what, how are you emotionally? How are you psychologically? Are you okay? Is the question. Are you okay? And what you want to do from there is start to cut your size down if you ever go into drawdown. Because remember, a part of risk management, once again, you want to keep the account. That's a part of risk management. You want to keep the account. You don't want to hit those limits. Or if you're trading your own money, you don't want to blow in account. That's not what you want to do, right? And so if you decrease your size in half, let's just look at trader A. Trader A, if he was trading at 1%, he or she, what they're going to do is they're going to go from 1% to 0.5%. Trader B, if they were risking 0.5%, they're going to go from 0.5% now down to 0.25% of their account. And if you need to go lower, you can, because what you're doing at that point is you're saying, listen, I now am going to get my psychology back intact. I now am going to cover myself. I now am going to protect my capital. I can't hit this limit, so let me protect it. Let me grow it back. Now you're going to turn, if you were the fast and aggressive person, now you're going to turn into the slow and steady person. And if you're the slow and steady person, now you're going to turn into the slower and steadier person. Okay? I pray y'all picking up what I'm putting down, because this happens. These things happen. When we're not in drawdown, when we're in profit, there's no problems. There are no complaints. But the moment we're in drawdown, this is panic. This is fear. You're going to get beside yourself, and you have to slow down. But let's talk about something different on the terms of drawdown. And I want to bring this up. I think this is something we need to talk about more. There is nothing wrong with resetting to refocus. There is nothing wrong with resetting to refocus. Some of you are in prop firms that you should have been reset. Some of you have accounts that have been in drawdown for too long and you can't get out of it. Some of you are trying to hold on because of ego and pride. Some of you need to learn to let go and let God. Okay? This is a video game mindset. I don't know how many of you play video games. I play video games. But when we're stuck on a level, we quit. If we've been stuck for too long, we stop and we say, okay, forget it. It's not working. And you stop because you understand you're stuck and there is nothing you can do to get unstuck. So now you got to start the level over. You have to. Because now you get to go back through and figure out what happened to get you stuck. So you don't get stuck again and you can win the game. Some of you need to reset, refocus to win the game. That's what y'all need to do. Come up with a new game plan if the old one didn't work, especially if you lost multiple accounts. And again, it is so easy to lose a prop firm account because, and let me put this into perspective again. When you have your own money and you're trading your own money, if you lose 10%, it's still your money. The problem with prop firms, with prop firm trading, not with prop firms, with prop firm trading, if you lose 10%, they take the money. They take your money, your investment, what you paid in there, they take it. But that doesn't mean you lost. It just means that you have to reset. That's what that means. That's not always a bad thing, especially if you get the right prop firm and you put the right investment in. That's why I like prop firms, because I would rather lose a small pay in than all of my money that I put into my account, my own self. It took me a while to understand that, right? But you got to go through this. You're either the winning trader, you're adhering to the rules and you're trading in good markets, or you're in drawdown and you got to reset and refocus, decrease the lot sizes, decrease the position size, decrease everything so that your account may increase again, get it back to break even and trade again, right? Or you reset the full thing and you start all over. And there is nothing wrong with that. Nothing at all. Okay? But that's when things get tough. You got to think about that. You got to make the decision. When is it time to reset? When you're stuck in your prop firm, it's stuck in drawdown. You can't get out of it. When you've been stuck for too long, and only you'll know that. I've had to tell people to reset. I reset. I'm about to probably reset another prop firm account, a really small account. I'm probably about to reset it. There's no harm in that. I'll now show you guys what it's looking like, what the last few trades look like. But there's no harm in that, right? Especially when you know you can go and get better. You can go and do better. Okay? So I really wanted to come and talk about that really quick. Decide the trader that you are. Are you trader A? Are you fast and aggressive? Are you trader B? Are you slow and steady? Are you, let's say, trader C? Are you in drawdown and you need to decrease? Or are you trader D? You need to reset and refocus. Choose where you are right now and then go forward. That's all y'all can do. Okay? So I'm going to answer some of y'all's questions because I see that I have some questions coming in. And let me go ahead and get those questions now, okay? Someone asked me what's the best broker. I don't think there is no best broker. I think you need to do research on the broker. Like Google brokers, honestly, depending on what market you're trading, Google brokers. My personal broker is Owanda. I pray I'm always saying it right because I don't never know if I'm saying it right. But I use Owanda. And they're okay. They're only for Forex traders. You can't do indices. You can't do hedging. You can't states. You can only do currencies on it. But I like it. It's low leverage. You might not like the low leverage, but that's why I also do prop firms. So yeah. But Google brokers, I don't think there's not one best broker. Hey Marcus, coach, I'm having a problem of impatience and FOMO and it's due to drawdown. Help. You need to get a one-on-one with me. Email me. I'll send you a link for a one-on-one, just me and you. And we'll work that through. But I will need you to do something. When we get into the one-on-one, I need your metrics. I need to see the trades that you've taken in your prop firm account. I need to see what those trades look like. And I need to see, I need everything. You know how I always tell you to put your art on your chart, right? Give me stuff to work with so I'm not guessing and you're not guessing. I need exactly why you entered your trades. I need to know what your impatience looks like. I need to know why you're having the fear of missing out. And I need to know what your drawdown is looking like. So we got to look at your metrics. And then we're going to go forward from there. Okay, Marcus? So do that for me, okay? I need a mentor. I would like to register for your online class. Great. Link in my bio. Oh, I'm so glad you said that, you guys. The next price action masterclass is going to be in February, the last day of February, 8 o'clock p.m. Eastern Standard Time. It's going to be a night class. Y'all can go ahead and register for that class right now. The link, if you are on Instagram, is in my bio, second link. If you are on YouTube, it's actually under the descriptions. So right now, the class, y'all know, starting off, I love giving y'all discounts. The class is $69.99 right now. And you guys know that it goes up every single day until the class begins. So y'all can go ahead, purchase and save your seats, $69.99. That's where I'm teaching you guys a full-blown strategy on how to trade this. I'm telling y'all, just to learn how to trade, right? Some of you guys do not have time to create a strategy. Some of y'all don't even know what back testing is. Some of you need quick help to say, hey, what's the strategy I need to trade? How to enter a trade, where to enter a trade, where to place my stop loss, where to place my take profit. We go through all of that in about 2 to 3 hours. I teach you exactly how to trade everything. So y'all make sure y'all go ahead and register and save your seat for the class. And then y'all gonna get emails along the way to show y'all what y'all need before the class begins. What Forex prop firms would you recommend right now? And this is so good. Right now, I honestly recommend the 5%ers. One of the reasons why I recommend the 5%ers is because they have a boot camp. And the boot camp is to help test your consistency. And it's only $95 investment. Like that's the first part. It's $95 for a $100,000 account. Mind you, you have three challenges, and each challenge you only need to make 6%. So where I was talking about, like right here, the profit goal is 10%, and the challenge for them is 6%. And your max drawdown is 5%, and your cutoff for the daily drawdown is at 3% or 2%. 3%. I think they have a pause at 3%, if I'm not mistaken. And you can't risk 2% in one single trade at all. One single trade cannot be more than 2%. Okay. But literally, if y'all think about it, they only want you to make 6%. And then once you pass that challenge three times, a cumulative of 18% overall, every time you pass a phase, let me say this, every time you pass a challenge, they increase your account by $25,000. Let me tell you why I like that psychologically. Some of you have never scaled an account. If your goal is to scale an account, one, they want you to make 6%. Two, they're giving you an extra 25,000 every time you do. Psychologically, that's motivating. That's motivating you. It's showing you you can do it. It's giving you a bonus or a reward every time you scale up. I love that about this prop firm, because what most prop firms do is once you hit 10%, they start you over. Then they say make 5%. That's not motivating. Now I feel like I gotta do the challenge all over again. I didn't get anything for completing the 10%. So that's why I like this prop firm. And then once you complete the three challenges, then they say, okay, well now for the $100,000 account, pay 205. So you're only paying $300 for a $100,000 account. It's the cheapest I've seen for a $100,000 account. So I like the 5%ers. Link is also in my bio if y'all want to go straight to the 5%ers. Click the bio in my link, the very last link in my bio. So I like the 5%ers because of that. So I haven't seen anything really bad about them. I like them. I traded through MetaTrader on my phone. So yeah, someone asked, so what trading platform do you use to trade? The 5%ers, their broker. And I analyze on TradingView. I always analyze on TradingView. And I demo trade through TradingView. I teach through TradingView. I have my connected broker, my personal broker through TradingView. So yeah, I just like TradingView, you guys. For US traders, what prop firm? 5%ers once again. I know FTMO, it's like, I love FTMO, but the fact that they may not allow US traders anymore, y'all, the 5%ers. I think I'm scared or I need more knowledge. I think classes would do. So let's tackle this. If you're scared, you have to ask yourself, why are you scared? Like what is the fear, right? And where is that coming from? And then it could be because you may have a knowledge. So if you need more classes, definitely, you know, I have a class coming up the end of this month. Definitely be there. Get the knowledge that you need. For traders in the States, what proper 5%ers? Once again, I can't keep saying that enough. And I want to ask if the Rive is a good broker. I have no idea what broker that is. Yeah, I've not tried every broker. If y'all need to know what broker to use, honestly, Google brokers, right? Honestly, I had to do that. Go research reviews on brokers. Go and I mean it's a lot you can do with brokers. They have reviews everywhere. Now, one thing about TradingView, excuse me, that I like, and I don't know if you guys know this, and if you guys are on TradingView with me, I'll show y'all this now. Through TradingView, if you go to see broker list, I don't know if y'all know y'all could do this. They give you a list of brokers, and TradingView is always adding brokers, right? So they have a list of brokers here, and if you don't see the broker that you like, if you click on see all brokers, boom, look at all of these brokers that y'all can choose from. And a really cool thing about choosing brokers here is that if you click on them, I'm just gonna click on one. Let's just do FX Open. I've never heard of them. But that's how you get to them. Let me see here. Boom, boom, boom. There should be a way. Oh, it says learn more about FX open or compare it with other trusted brokers. So if you guys do this, and you can see there's reviews here, they tell you how many accounts are here, link through them with TradingView. Y'all, they will literally take you to the website or compare it right here. So y'all, TradingView really is a great platform, all in one platform. So try this. I mean, they have Pepperstone. If you're not in the US, Pepperstone is really good. I think capital.com. I don't know if they take US traders, but I do know they're Forex as well. Um, they have Forex.com. Owanda is the one I use. They have crypto brokers, futures brokers. Like there's so many that you guys can choose from right here. So there's no reason we can't say we can't find a broker when we actually can on TradingView. You just need to do your research. Any other questions, you guys, before I go? I told you this was gonna be quick. Do you trade futures as well? I do not trade futures. I've always said if I did trade futures, I would trade cocoa because I like the way cocoa moves. But other than that, no, I don't. But I'm glad you just said futures. I don't know if some of you guys know this. If you use or if you understand contracts, especially if you're a forex trader, Apex is a prop firm, and they have a monthly subscription. Okay. And what that means is that instead of you paying one big amount, you pay a monthly amount for a certain amount of trading capital. And you don't have to make as much as these prop firms, the forex prop firms are telling you to make. I think for them, you only need to make like 3% or 5% or something, right? But they still allow you to trade currencies. You can trade metals. You can trade futures. Everything is just in contracts. If you understand anything about contracts, then I think you'll be good for that. But yeah, y'all can look into Apex as well as a broker. If I did trade futures, I would do that. Would you recommend trading with EAs? If you wanted to, fine. I don't personally trade with EAs, but I mean, I don't see a reason why you wouldn't want to if you think that is something that can help you. But if you want to trade yourself, I say go for it. But I can't recommend something that I've not tried myself. But it's not like I see the harm in it either, you know? And I have to ask, is it your EA or is it someone else's EA? So that's what I have to ask. Thank you for your time. So God bless. God bless you too, sweetheart. Any other questions before we go, you guys? And I want to make sure I've gotten all the questions. I think that's all of them so far. I think that's all of them. Any other ones before I go, you guys? Oh no, I was gonna do one more thing, especially for the people who are watching here. Um, I want to talk about the markets really quick. I was in a few trades, and this week wasn't actually a bad week. Um, I'm in drawdown like point. What is it like 0.15, 0.25? No, no, that don't sound right. Anyway, I'm in a little drawdown. It's not even a lot. It's not even a lot, but I'm going to show you guys something here because I am working with a small account. It's $25,000. And if you guys follow me on TradingView, then y'all know that I gave out, or if you're my trading friends on Instagram, then I gave out some trades, right? And I ended up losing a few of them. I'm going to show you guys in just a second. But I ended up losing a few of them. But there were two trades in particular that I held too long. One trade, I took profit early because of another losing trade. So I took profit on that trade to make up for the loss. But yeah, let me go ahead and explain it really quick. I'm not gonna show every single trade. I'm just gonna talk about a few of the trades. Okay. Someone asked, what strategy do I use? I use my strategy TMP. So I was in this Euro New Zealand dollar trade. Let me show you how amazing this trade was, by the way. So this trade was a 35 pip stop loss, and the TP, the take profit, was around 178, 77 pips, right? I was in this trade and it was going well, but I ended up taking the profit early because I was also in another New Zealand dollar trade, and that one ended up stopping me out, and it ran up. They're kind of like sister pairs. So when one trade does something, the other tends to follow. And so I said, you know what? If I just lost on this trade, let me go ahead and take profit on this other trade to make up for the loss. And that's what I ended up doing. And I'm actually glad I did, because if I didn't, y'all can see that price is reaching back to where I entered this trade anyway. And so yeah, I would have just gave back all the profits anyway. And that was right. That was technically, I wouldn't have given back the profits. I would have taken profits. I took it too early. But anyway, that's neither here nor there. That's what I did on this one. Okay. But it was a profitable trade, as you guys can see. Also, I'm going to share Euro AUD with y'all, because we got to talk about risk management when we're talking about these trades. So if y'all follow me on TradingView, I gave out a beautiful trade. Now, this one did not come to fruition because it actually ended up making a very new low, but I was already in the trade on this pair. And this is how the trade went. And y'all can see it right here. I'm going to set it up exactly how the trade went. So the stop loss was 34 pips. The take profit was 200, around 239 pips. And this is the analysis. I'm going to bring up the full analysis with the chart so y'all can see exactly how it looked. Y'all can see that this was the trade that I was already in. And this was the analysis that I was hoping would pan out, right? And so obviously this is where we are now. So price did not, it before it pulled back, it made a new low. And I said, okay, you know what? Because price made a new low, I'm going to go ahead and enter again. So this is what my entry looked like. This is what the trades look like, right? Now, when price started to push down, I was thinking, okay, great. It's going in my way. It's going in my favor. So what I ended up doing, I ended up moving this trade to break even. And I ended up moving this trade to where price on this position now equaled the risk or the stop loss of the second position. So now I got a little bit of profit on the trade. But as you guys can see, price ended up reversing. And I mean, it still had a way to go before it hit my TP. It wasn't too bad. And y'all, I was up like on this trade alone, I think like $400-500. And then when this started to go down, that was like another $100 once it started to go down. But it obviously turned. But because when you're managing positions, risk management, once again, is to manage, you got to have a point where you move your trade down to break even. You just have to, right? So yeah, so those ended up stopping me out, but at least I got a little profit on those. GU was one that I was in. This I've been battling with GU. I don't know what's been going on with GU. And if y'all been trading for looking at me for a while on Instagram and YouTube, y'all know I really like trading GU, but she has really been like a mess. She is emotional. I was in this. I ended up getting stopped out of this one 3 times. Twice, once at break even, once in profit. I think once for a small loss, once for a small profit again. Like this thing has just been like all over the place. I don't know what's been going on with her. And then New Zealand dollar, I haven't traded her recently, but she did have a really beautiful opportunity to the downside. But Wednesday and Thursday, I wasn't on my chart. I have basketball, and then my son's birthday was yesterday, so I've not really been on my price charts like that. Um, but yeah, but this one wasn't too bad. So I'm like, that's all right. But because I'm working with this new small account, actually it's not a new small account. I've had this account for a little bit now. I decreased the position sizes. So the position sizes were between like 0.25% and 0.5% with hopes to gain like um I was going for 5% more on every target, right? So that was the goal. So I'll show you guys what that looked like here. This was USD CAD. And so I have my results right here on what the trades look like. And I have this for a really, really good reason. One of the reasons why I have this is because I want to show you. Oh, and then there was a NASDAQ trade that I lost to. I forgot about that. NASDAQ. I don't normally trade NASDAQ, but I did see a good buy opportunity, but it stopped me out. But it's fine. But I wanted to show this because when you're trading multiple currencies, or heck, even if you're trading one currency, the goal is to lose small. Like that is the goal. Lose small. And what I was doing for these particular trades, I have a concept in mind that I'm testing right now to hold the trades longer. Normally, I take positions. If y'all ever been in any of my class, or if you've been listening to me for a while, y'all know when I use a Fibonacci, like it's one on my chart as well right here. I normally take profits at my negative 27. So had I done this week would have turned out a little different. I would have made about $1,500 to $2,000 this week. So this week would have been a little bit different. But instead, I'm ending the week down 61 bucks, okay? Which that's not bad because every trade on here had the potential to make $500 to $600 more. Okay. Some of them had the potential to make like $300, but for the most part, most of these had the potential, but held too long because of theory that I'm testing. And sometimes this stuff happens when you're trading. It's no excuse or anything, you guys. When you have a theory or you have a strategy you know that works and you're testing it and you're testing something, just understand it's always not going to go your way. But this is also the example of slow and steady, because some of these profits, if I was fast and aggressive, some of these profits would be 4 times more than what you see. But what that also means is that some of the losses would be 4 times more than what you see as well. And so this is about just being realistic when it comes to trading and what we do and what we deal with in the markets. You got to look at it. You got to face it. You have to face it head on. And if you decide, I don't like my results, I don't like the drawdown I'm in, then you got to change something. You have to change something. Or if you say this, because we don't talk about this as well, if you feel like your results are too small, you got to go bigger. You have to go bigger. If you're the person who's like, yo, I want these results to be, instead of winning $162, I want to win $1,060. Increase your capital, increase your percentage. That's what this boils down to. That's what this all boils down to. Okay. So I wanted to show y'all that. Yeah. So I just had a question on here. Good afternoon, Shaquan. Good afternoon. What platform and broker are you using to currently trade? I use Oanda, and right now for my prop firm, I'm using the 5%ers. Any other questions, y'all? Because if not, I'm gonna go get me a really nice smoothie or something, or a nutritious drink beverage somewhere because I am parched. I got my water here. You're the best. Thank you. You're welcome, sweetheart. Mm. But I will say, you guys, there are some really good trades setting up. If you're here and you're in my group, and we meet every single Sunday, y'all, my God, there are some really good opportunities. Like even here, I see a really good buy opportunity. And if I was here on Wednesday, looking at my chart, and I don't think this is a missed opportunity. I just think I was mom life and life was busy. This was a beautiful buy back up to the upside. Oh my gosh. How beautiful is this trade? This is just amazing right here. How beautiful is this position? Wow. That is beautiful. 1.82 reward. And then that New Zealand dollar trade, and she would have hit TP today. That's crazy because, man, if I could have set this yet Wednesday, today that's profit right there. And I think this one was like a 1 point. What was this? I don't even want to guess what reward to risk this was. What was this one? 33 pips to make. Wow, 2.75 reward, risk to reward. That was beautiful. But we'll catch it again because she has another opportunity setting up too. So the Cats have really great opportunities next week. I can see GU, she playing too much. I'm not gonna touch her for a little bit. She playing too much, but these two got good potential. So yeah. You ever trade VIX? No. Synthetics? No, sweetie. I haven't. Do you recommend TOS? What is TOS? I don't know what that is. What is TOS? What does that mean? TOS. Anyone know what TLS stand for? 'Cause I have no idea. I don't know if Yuri is still here, you guys. But well, but I'm about to go, y'all. For real, I said that like what 10 minutes ago, but I do have to go. But I'll be back online next week. I'll be doing another class next week. But once again, you guys, Price Action Masterclass, register for the class, link in my bio. If y'all have any questions, DM me and we can go from there. Marcus, if you're still on, make sure you get that one-on-one with me, okay, sweetheart? So yeah, you guys go be blessed and y'all have a good weekend. Goodbye, everybody.